It's time now for an in-depth look at markets around the world, including here in Korea. And for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thanks for coming on today.
Thank you for having me.
So overnight on Wall Street, U.S. tech stocks especially fell big time. The Nasdaq down almost 1.5% and the Dow about 1/3%. Obviously, the blacklisting of Huawei playing a role there. What's happening there?
Yes. So with the news of U.S.-China trade dispute continue to worsen, global market continues to fall in the past couple of days. So far, the global market has fallen about 5% from its peak in early May. The news of the restriction on Huawei products on trade resulted in a big sellout of most of the global equity market, including U.S. and China, and particularly within the IT sectors. As you mentioned, U.S. Nasdaq was down close to 1.5%. However, though, over the night, the U.S. government on Monday temporarily eased some trade restriction imposed on China's Huawei, a move to start to minimize the disruption of the telecom companies' customers around the world. The U.S. Commerce Department allowed Huawei Technologies to purchase American-made goods in order to maintain existing network and provide software updates to existing Huawei handsets. Google did not immediately respond to this, but nevertheless, it seems that still there is a standpoint in regards to the trade dispute at this point in time. We're not sure whether this is going to be a long-term process, but for the time being, there is some possibility that the dispute might be settled in the short period of time. With this kind of news, the markets are recovering nicely. The Korean market has recovered. Kospi 0.27% up. Kosdaq was up 0.27% as well. Chinese market also recovered quite nicely, 1.2% for Shanghai and 1.9% for Shenzhen index.
Yeah, we'll see if things go the same way tomorrow on Wall Street. But because of the trade tensions here in Korea, the local currency has weakened to right about 1,200 won almost against the dollar. We could end up seeing some intervention by the Korean financial authorities. How's it looking today, and when do you think this might turn around?
Yes, the Korean won seems to be stabilizing with the news that the government might intervene in regards to the rate. Given that recently the Korean interest rate seems to be lower than U.S., and the Bank of Korea is expected to lower interest rate probably by about 25 basis points in the late third quarter or beginning of the fourth quarter. Because of that concern, the investor seems to be betting on Korean won depreciation. As you have said, the Korean won has depreciated quite significantly from around 1130, 1140 level to now almost as high as 1,200. The peak was 1195.5. Today, it's stabilizing a bit to 1193 level. However, though, if you look at in a longer-term basis, if you look at Korea's trade surplus, it is 4.12 billion in April, and there is a relative low amount of a government bond, which is only 36.6% of GDP as end of 2018. We don't think that the won depreciation will continue in the longer term, and it should stabilize in the longer term. And also, as you said, government will be intervening in regards to the won. Yes, having a weak won will have a very positive impact on the export, but as for the consumptions and domestic consumers, the burden will be quite high. So we need to see more stable Korean won. And given the fact that the trade surplus and the small level of debt, we think that the won should appreciate to 1140 level in the longer term.
Got it. Well, let's talk about oil for a minute. OPEC members and non-members like Russia met last weekend and agreed to keep production down again this year. Oil prices have, of course, risen recently. Where do you see this going?
Yes. As you said, oil price rose for the second day in a row as the signs of OPEC and its allies will extend production cuts beyond June of this year. However, though, there's a still continuation of worry about deterioration of U.S.-China trade relationship, and the global economy might be slowing down because of this. So continuation of the both side of the supply as well as demand are in concern. if you look at the extension of the supply cuts by the OPEC, we think that it could be quite sizable. And also, with the concern about U.S. and Iran war happening maybe in the future, possibility of the oil price rising is definitely here. So people might be thinking that oil price might rise to as high as previous peak of $78 level. But we don't think that's going to be happening because of the U.S. shale gas productions continue to be very strong. And also Russia might be putting some efforts to put some additional productions into the table. So all being said, we think that the oil price should be fairly stable, somewhere between 60 to 65 level. But in the short term, maybe because of the concern of the productions, might hit to as high as $70 in the short term.
All right, Mr. Yu, well, we'll have to leave it there for today. Thanks for coming on. We appreciate your insights.
Thank you very much.